Guys, my name's Travis, and today we will be talking about the 7 money habits that are keeping you in debt and not maximizing your financial potential. I wanted to share with you a quick background and a quick story about myself in terms of why I decided to make this video and overall this whole channel. So feel free to subscribe and like it if you end up learning something from this. So after college, I was about $50K in debt, which I felt like that was overwhelming. I didn't really know how to get out of it. And luckily at the time I was able to secure a 9-to-5 job, which helped support that. However, it wasn't enough to fully get me out of that situation. And I felt like more and more bills and more things were adding up. And so I just felt financially lost. These tips really did help me get out of this mentality of feeling stuck. And at the end of the day, in about 2 to 3 years, I was able to pay it off in full. Not everyone's circumstance is the same, I acknowledge that. So with that being said, my story, take that with a grain of salt, but these 7 steps will definitely help you get into the mindset of how you can either get out of debt and how to also grow your money on top of that. With that being said, let's get started. Number 1, you're paying everything with a debit card or in cash only. You want to be able to maximize your credit card and your cash back programs. Obviously, do not overspend what you can't pay in that month, but credit cards is a great way to begin building A, your credit score, and B, getting rewarded for doing so. Another thing to keep in mind again is to not overspend what you're not able to afford, and you want to be able to pay your monthly payments in full. Number 2 is that you're probably paying yourself last right now, and you don't want to do that. You want to reverse that mindset to start paying yourself first. And what that means is once you get that monthly paycheck, you want to set aside maybe 10 or 15%, whatever your financial goal is. Pull that into a savings account right away so you're not tempted to spend it or you lose track of it. And then the rest of the money or the paycheck, feel free to distribute it however you want, but definitely make sure that you're pulling aside some money into a savings account. That being said, making more money is not always the right answer in terms of how to get rich. It's really about how you save and how you maximize the money and grow your own money when you do get it. Number 3 is drop the habit of having disorganized finances. And what that means is you want to try to consolidate your accounts as best as possible so you can see it all in one view. I recommend the app called Mint. It's a secure app where you would just upload or connect your bank data along with your credit card data and stuff like that. And then you can see in one view, it's like a pie chart of how much you're spending and where you're spending that money on. And it helps you create those financial goals more tangibly, because if you don't set goals, saving goals, for example, at the end of the day, you're gonna lose track. And if you do make progress, you won't be able to appreciate that as much. So definitely try to get apps like Mint where you can consolidate all into one view your finances so you can learn more and, get better at saving, for example. 4 is numbing yourself to debt. A lot of the times in America, at least, you'll hear your friends and family talking about, oh, I'm in, student loan debt, but I'm gonna get a bigger mortgage separately and be even more in debt, and that's fine because I need to get a house right now. You want to try to focus on paying off your current debt like student loans and focus on that first before getting into more debt if you need to get these loans. So I wouldn't recommend getting everything at the same time because financial situations can change. Let's say that you get laid off, then what would you do, for example? So just be mindful of the debt that you have, ways to either sustain it and pay it off on a cadence, but definitely focus on paying one off first before getting into more debt. Not getting a high yield savings account. And what a high yield savings account is, it's pretty much just a normal savings account, but it's only online. And what you can do is you can take advantage of their interest rates. It's, if you put your money, let's say 10K in just a normal savings account or checkings account, you might grow it by 0.01% per year and might get that money back, which is extremely minimal. But with a high yield savings account right now, you can get 0.6 to 1.5% back. And so your money is growing and compounding for you without doing anything. And it's, again, the same thing as just getting a savings account. And a lot of the times they're free. So if you tap the link in my description, you can see the ones that I use. Note that on average, every year, we're gonna go through what we call inflation of about 2%. And so if you're not investing, having your money grow for you, you're technically losing 2% a year on that. And with a high yield savings account, you're able to combat that way your money is growing and compounding for you, and you're not just suffering through this, what we call inflation, which is where money just decreases in value. Number 6, you're probably not thinking about taxes, or that you might be overpaying for taxes or different loopholes that are available out there for the average consumer or the average person. There are a lot of tax loopholes, it seems like, for people that are very wealthy, but for the average American, here are some ways that you can start thinking about how to shield yourself from having more taxes on the money that you work so hard to earn. One is a 401k. This is a retirement plan that a lot of companies will offer. So when you put money there, you're able to get tax deductions as well. The ways to shield your money from taxes are things like an HSA or an IRA, and we'll go into detail into future videos for this, so feel free to subscribe if you haven't already. Last but not least, tip number 7 is probably the most important one I would say out of all of them, is it's never too early to invest. A lot of the times people put off the idea of investing until, you know, they have more time to research or they have more money, and it's just a way to procrastinate and prolong the chance that you have to start making and growing your money. You want to be able to start investing slowly and while you're learning, little by little, until you're comfortable with it. But I would definitely recommend starting to invest and looking into different ways to invest. There are things like mutual funds, index funds, ETFs, individual stocks, which are a little bit more risky, IRAs for your retirement investments that will grow along with you until you're 59 and a half and can take it out. So definitely start learning through different methods of investing so you can maximize and have your money work for you and not you working for money for the rest of your life. So I would just recommend starting off with setting aside just 1 or 2 days, watching a lot of YouTube videos, figuring out what questions you might have. Comment them below. I would love to help answer you and lead you in the right direction and provide you different links and resources so that you're able to learn more for yourself, because everyone's financial situations are a little bit different. But I'm here to help you guys, and I'm here to be a support system as you guys are learning all about this. In closing, I just wanted to share with you guys the 7 steps in terms of how I was able to get out of debt and how you can as well. Everyone's financial situation is different, but these mindset and these different ways to approach financial planning on a high level will definitely help you understand and be more conscious and aware of where you're throwing your money that you work so hard to earn. With that being said, feel free to subscribe and give a thumbs up if you learned something new in this video, and I'll see you guys next week. Bye guys!